I took my older son to the dentist for the first time when he was 3 years old, and I was ready and waiting for the dentist to praise me up one side and down the other for starting his dental care early and for all the work that I had done to brush his little baby teeth and take care of his mouth. And that was not what I got. I showed up at that dentist's office, and after coming in and looking at his teeth and, doing the little baby check that they do, I got what was basically a lecture about the fact that apparently my son had some like soft spots in his teeth that were genetic, didn't have anything to do with what I was or wasn't doing. But she was pretty aggressive about the fact that like I should have been there earlier with him. And now, I was putting his teeth at risk and all this other stuff. And I walked out of that appointment almost in tears. Like, of course, I was sort of embarrassed to get called out by a professional in an office. That's just part of my personality. But more than anything, I felt horrible about having failed my son, right? So I tell that story now with 15 years distance between when that happened and today. I can sort of laugh about it. It's still painful, but it was something that got called to mind after my conversation with Danielle Hayden today. And I should warn you, the conversation that you're about to listen to, and I really do want you to listen to it, even if it doesn't sound like your favorite topic, is about taxes and the overall financial health of your business. And again, I recognize and appreciate and acknowledge that this is not a conversation that many photographers are excited to have or a subject that we are dying to dig into. However, like taking your child to the dentist, it is a responsibility that you have as a business owner, right? So when we take on the responsibility of running a business, we have to acknowledge that the financial piece of it is part of the puzzle. And if we're not paying close attention to that, and if we're not getting the help that we need from a professional, chances are something is going to get missed. And that something can cost you a lot of money, either in missed opportunity when it comes time to pay your taxes, or it can come at the expense of like you did something wrong and later on down the road, you actually get charged for it. So every year, I do like to bring a tax professional on to talk about this very important subject. And I really enjoyed my conversation with Danielle today. I think you're going to enjoy it too. She had lots of practical tips, but she was also empowering in the way that I think is important when it comes to accounting and bookkeeping, which is to say, you really don't need to be doing this. In fact, you shouldn't be doing this. You should be getting someone who knows what they're doing to help you with this. And I don't care if you are at the very beginning of your business and your income is not what you believe that it will one day be. Starting early with professional deductible help in this area will help set you up for success in the long term. So listen to this episode, grab Danielle's freebie when she talks about that at the end, and that is linked in the show notes, and put it into action. This is going to help you sleep better at night, not just during tax season, but all year round. Welcome to This Can't Be That Hard. My name is Anami Tonkin, and I help photographers run profitable, sustainable businesses that they love. Each week on the podcast, I cover simple, actionable strategies and systems that photographers at every level of experience can use to earn more money in a more sustainable way. Running a photography business doesn't have to be that hard. You can do it, and I can show you how. Danielle, welcome to This Can't Be That Hard. I'm so excited to chat with you today. How are you?
I'm doing fabulous. How are you?
I'm well. We were just before hitting record talking about our our weather woes. It is that time of year. It is crappy outside. Sounds like even worse for you than it is for me.
You know what? It's like tax season and winter. It's like they purposely put those two together. So we're in ultimate pain mode.
I know. Although, in some ways it's like the weather forces you to just be like, you know what? I guess I have nothing better to do than to sit at my desk and like get this stuff taken care of. So, yeah, no, it's good. Well, before we dive into all things taxes, which as we were also saying, I know this feels like vegetables to a lot of you listening out there, but we're going to make this as fun and actionable as possible. But I would love for you to sort of do an introduction. This is your first time on the podcast. Let everybody know who you are and what you're all about.
Yeah, thank you. So Danielle Hayden with Kickstart Accounting, Inc. Started the business 10 years ago, which is absolutely insane.
Isn't it funny?
Yeah. I started my entrepreneurship journey really as a creative. So when I come and talk on shows like this, I'm really coming at this from both angles. I actually used to work as a hairdresser. So
wow.
I spent my time as a hairdresser, yes, behind the chair and that creative mindset, but I found that I really enjoyed using the numbers to help myself and the other girls within the salon use it to hit our goals, to be able to make more money.
Right.
And it felt like I was playing a game with money. And I was teaching the other women in the salon with me how to play this game of money. I went back to school, ended up in corporate, and I was doing the same thing. I was working as a chief financial officer, helping the CEO, the board of directors, private equity firm play this game of money. Let's use the numbers to understand what's working, what's not working, how we can run this business differently so that we can hit our goals. And realized I had this knack for, let's take the numbers, let's learn from them, and let's use them to grow businesses that we're passionate about. And being ready, prepared, and confident for tax season is like an added bonus.
Right.
Because what I really want for all business owners is that we feel confident and empowered with our financial statements, with our numbers, with making business decisions throughout the year, that when we get to tax season, it doesn't feel like a burden.
Right. Right. Totally. I love that. And I love your sort of history as somebody who was doing it and then saw that, it was a game. And I'm going to I hate the word gamify. I feel like it's overused in a big way, but when it comes to business, that's the way that I feel about the business side of photography. It's like, I got into it kicking and screaming. Like, I was like, oh no, I don't know anything about sales and business and I came from a medical background. And I was like, this is like the dirty word in, this career that I want as an artist. Yeah. But the more that I got into it, the more I was like, actually, it's kind of fun. And actually I can be just as creative in this space as I can be with my camera in hand. And so, yeah, it's what I love communicating to other creatives, is this sense of like, it doesn't have to be terrible all the time. And especially when you're using it to achieve your own goals, like, it really is it's a rewarding path to go down.
And it's a tool. Yeah. So the reframe that I like to use is that these are all tools in our toolbox. And the more tools that we can arm ourselves with, the easier, maybe easier isn't the right word, but the longer, more sustainable we can become in entrepreneurship. It's a long game. It's a really long game. So we need to be adding tools to our toolbox to make sure that we can be sustainable in this industry.
Amazing. Sustainable is one of the 3 key principles behind this show. So I'm all for it.
Good.
And we are, as I said, sort of here in Q1. It is that time of year. I always try and bring somebody on the show who is an expert in all things like tax prep and all that sort of stuff. So that is what our focus is going to be today. But if you happen to be listening to this show sometime else throughout the year, the other piece of this that Danielle and I were talking about prior to recording is the fact that really this is, it's like tax season. We have to like dot all our I's and cross all our T's. But ideally, these are things that we are sort of keeping in mind year round so that when this time comes, it isn't a big hill to climb. So I've got down here that we're going to be talking about overlooked write-offs and things like that. And I think I'm going to just let you dictate where we dive in on that list and where we start.
Perfect. Well, I want to start at the beginning.
Okay. That sounds like a good place to start.
I'm going to start at the fundamentals. So I know we want like the quick wins. And in these steps, right? The step 1 is that we have bookkeeping that is accurate
Mm-hmm.
and organized throughout the year so that when we arrive at tax season, we've already looked at our numbers. So when we work with our clients at Kickstart, we are sending our clients their financial statements and their snapshot every single month so that they know they have accurate bookkeeping. They're able to do their job as a business owner, which means look at the numbers,
Mm-hmm.
understand the numbers, and then use that information to get prepared for tax season. I know tax season feels transactional. It feels like this one-time event, but it really shouldn't be. It should be something that's happening every single month in your business.
Right.
So when our clients get their snapshot, we have something in there that's called a tax reserve. And this number is 25% of your net income. So it's no big secret. Like anybody can go pull this number. It's 25% of your net income. And what I want you to do with that number is to start saving for your taxes. Now you're going to pay your estimated taxes throughout the year. You're still going to take that amount from your CPA. That's the amount that the IRS says you're required to pay for your estimated taxes. You're going to pay that. But the real gold is getting prepared for next year. Because if you're listening to this podcast, I would guess that you're continuing to grow. So your profit this year is going to be bigger than your profit last year. And you're still going to be caught off guard. So that's why people are caught off guard every single year. They're like, I paid my estimated taxes. Why do I have more in taxes? And this right here is why, because your profit has grown, your business has grown. And so we need to take that tax reserve and save those additional dollars over our estimated taxes. But how do you do that if you don't have accurate bookkeeping?
Right. That is for sure a big thing for a lot of people. And I feel like looking at your numbers on, everybody has to set it up for a schedule that works for them, but the schedule has to be weekly or monthly. It cannot be, I'm going to wait for 6 months and then try and catch up with reconciliation and all that sort of stuff. I have done that before. I have been there before. And it becomes this horrible specter hanging over your head. And then you sit down to do it and you don't remember what you bought on Amazon 6 months ago. And so you're hunting around in your receipts and your email, trying to figure everything out. And it just, it becomes this huge job. Whereas if you're looking at it every week or every month, then, it's an hour tops that, you're dealing with going through it. And I feel like that can't be overstated, the importance of keeping up.
You have to be checking in with your numbers monthly. Mm-hmm. So for bookkeeping, we do transactions weekly. So all of our clients, their transactions are processed weekly. And then your job as the business owner is to review the numbers. So I just want to clarify, if you are the one doing the bookkeeping, one, there's a better use of your time, but
agreed.
That's actually not your job. Your job hasn't actually started as the business owner. Your job's not to do the bookkeeping. And I would argue that when you're doing your own bookkeeping, you actually can't attest to the accuracy of your bookkeeping. And we can go into that a little bit further. But your job as the business owner is to come in at the high level. You are the CEO of your business. And here's what I hear a lot of people say in this industry. I own a business. I'm not the CEO. I'm not that sophisticated. I'm a creative. I just don't own that title, right? There's not an ownership of that title. And that's fine. You don't have to call yourself that. You can call yourself a business owner. You can call yourself a sole proprietor. You can call yourself an entrepreneur. I don't really care. The minute that you decided to take money from a client, the minute that you started signing contracts with vendors and in those relationships, you now have the responsibility to know your numbers. The IRS doesn't care if you're not a numbers person.
Right.
The IRS doesn't care if you're a creative. I know this is harsh, but your job
is true. Yeah.
Right. Like your job is to know the numbers. And so if you do the bookkeeping, don't forget that your job is to come in afterwards and actually look at the information.
Right. Yeah. And digest it, which is the other piece that I feel like gets really overwhelming for people.
Yes. I want to go into step 2, but I want to hang on the accuracy of bookkeeping for a second, because I had mentioned this to you before we hit record. One thing that we're seeing specifically in this industry, now we work with a lot of photographers, but we also work with other industries. But one thing that we see over and over and over again in this industry is clients will come to us. And we had a client last year who came to us, and it was one of the hardest difficult calls that my onboarding team has ever had, because This woman was so positive. She was so confident that her bookkeeping was accurate. She's like, I know I'm doing a really good job. I'm just finally ready to get this off my plate because I have better things to do with my life and I'm ready to get rid of it. Well, we went through everything and she had been overstating her income for like 3 years.
Oh.
She was overpaying in taxes for 3 years.
Wow.
Because of the sync issue from her point of sale system to QuickBooks. And she didn't know how to do bookkeeping, so she didn't know how to catch that information. So it was a really difficult call. But I just say that because I want everyone to have the ability and the opportunity to double check before we file our taxes. That money's gone.
Right.
She paid that money to the IRS. You know how many places she could have invested that money?
Right.
It's such a lost opportunity. Number 2 is, no, like I'll just skip over that.
Mic drop.
I guess any questions on that? I don't know.
Well, no, I mean, so you were saying it's a sync issue with her point of sale system, like her CRM, like her Dubsado, or
yep. We see it with Honeybook and Dubsado over and over again in this industry. There's plenty of other examples across different industries, but those are the 2 main ones.
Yeah,
and it's an example, right? Yeah, we had one woman who her bank feed had broken, and when she reinitiated her bank feed, it brought in all of her expenses twice.
Right.
She wasn't reconciling anything.
Yikes.
So she didn't see that the expenses were duplicated.
Right.
So when she filed her tax return, she actually took double the expenses.
Too many. Yeah. So too much came off her top line. Yeah.
QuickBooks is tough. And I just want to say, like, I'm not saying this to be judgy or like shameful, because I'm really not. QuickBooks is really difficult to use. And look, I can't do what you guys do. There's not a chance in the world that I could do what you guys do.
Yeah.
So I say that from a place of love, because QuickBooks is very difficult to use. And like, I went to school for a very long time. My team went to school for a very long time to know how to do this.
Right.
And so I'm not sitting here saying like, you should know how to use QuickBooks and be a bookkeeper. Like, I'm not saying that.
Right.
I'm saying you actually shouldn't. And therefore I want you to be aware of some of the issues that happen so that you're not over or underpaying in taxes.
Right.
Or open yourself up to an IRS audit, and then you have bigger issues.
I mean, it's the difference between looking up your symptoms on Google and being like, this is what my problem is, versus going to see a doctor. And you can use Google. We all do to a certain degree and to a certain extent. But if you wait too long, you can get yourself into real trouble. And I always feel like photographers do tend to do the whole thing where it's like, it's so expensive to hire somebody else to do this, and I could just save that money and do it myself. When I released that in my own life and in my own business, and it was the first outsourcing that I did in my business way back when, I was amazed that not only was it like a huge weight off my shoulders, but it was also something where I ended up overall making or having more money in my bank account at the end of the day, even though I was paying a bookkeeper, because they were finding ways to save me money that I didn't know about before. So I feel like it's one of those, like, it pays for itself. You just kind of have to get over the initial mental hump of like, paying to get it started.
And I always argue, can you really afford not to?
Right.
Exactly. Because we're paying that money one way or another. In those 2 examples, we have people who paid real dollars to the IRS.
Sure.
That they didn't need to pay.
Yeah.
So next is another fundamental, is separating your business and your personal finances. And this is going to lend ourselves to be able to continue to talk about how we pay ourselves and how we are able to enjoy those other tax write-offs. We have to have our business and personal accounts 100% separate. So when you go and pay for the daycare bill, that has to come out of your personal account. When you pay your mortgage, when you pay like anything that's truly personal, it has to come out of your personal account. We have to have a separate business checking account, a separate business credit card that all of our business expenses are coming from. Each month, if you are a sole proprietor or an LLC, you are taking money from your business account and transferring it to your personal account so that you have those owner's draws that can then fund your personal life. The United States gives us a opportunity for legal protection with our LLC. And when we commingle business and personal, we're piercing the corporate veil. So we are then taking that protection we were just given and literally piercing holes in it.
Right.
From an IRS perspective, we're opening ourselves up to a IRS audit by commingling. So it's really, really important that we're keeping that business and personal separate.
Yeah. And honestly, this is another place where, yeah, it requires a little bit of legwork up front, but it becomes so much easier, especially when it comes to dealing with your bookkeeper, or if you're still trying to look at your own things. Like if you know everything on this one credit card is business only and everything on this other credit card is personal only, then it's much easier. It's much cleaner.
It is much cleaner. And here's the counter that I hear from people is that, well, it's my business, so it's my money.
Right.
Like, can't I just take it? Or, well, I've already put 5 things on my personal account, so I'm just going to put everything on my personal account. Or I already commingled, so I'm just going to keep commingling. Oh, that auto charge is just already hitting my business card. I'm just going to leave it there. It's just having that personal responsibility.
Right.
Because here's what happens. A lot of people will come to us and say, I just don't think this business thing's working for me. Like, I don't know why I don't have any money. It doesn't feel like I'm bringing in sales, but it never feels like I have enough cash. And when we actually do the bookkeeping, we do a lot of catch-ups for clients around this time of year. So it means for 2024, they didn't do any bookkeeping. No shame, all good. We go back in time, pull all those transactions into QuickBooks. We have a snapshot of where everything was and is. So when we do that exercise, we're able to see like how healthy is the business. And a lot of times what happens is our owner's draws, our personal expenses, and our equipment is what the reason why we feel like we don't have any cash. The business is actually super profitable and doing great. And once we're able to understand the health of the business, it like totally shifts your mindset about where you can take this business.
I love that. All right. Number three.
All right. Next is our accountable plan. And this is a tool for my S Corp friends out there. Real quick, just a little bit of background and then we'll go into it. An S Corp is a tax filing status. So as an LLC, you can be taxed as an S Corp. When you are an S Corp, you are then on payroll as a business owner. So you become a business expense to your business. You are paying yourself through payroll. The benefit is that you are reducing the amount of overall taxes paid because you are not paying that self-employment tax. The other benefit of becoming an S Corp is that you can then go for funding. You can buy a home, a car. You'll be able to get personal financing because you are on payroll. You have a paycheck. You are no longer self-employed. So as an S Corp, generally we suggest becoming an S Corp after you have 2 years of about $75,000 to $100,000 a year in net income, not gross. Does all of that make sense?
Yep.
Okay. Once we have become an S Corp, there's this really cool tool called the accountable plan. And the accountable plan allows us to move cash from our business account to our personal account throughout the year without paying taxes on it. You're going to refund your personal account for things like your personal home office. My home office, I pay myself a market rate for the use of my home office by my business. Kickstart does not get free use of these 4 walls without paying for it.
You're renting space in your home or yeah, exactly.
Yes. Now, as an LLC, you still get a home office write-off, but it's a write-off on your tax return. It's just, have you seen that meme where it's like write-off? Like what is a write-off?
Right.
What is a write-off? It's just
it's
out
not cash in my pocket.
Right.
Yeah.
So as an LLC, you can get a home office write-off, but it's not cash. The accountable plan allows you to take money from your business account, move it to your personal account without paying taxes on it. Here's the coolest part. that is really a business expense, and you're actually lowering the net income of your business and paying less money in taxes.
Nice. Okay. I don't know that I knew that. That's fantastic. I mean,
Yes.
maybe that's happening because maybe my bookkeeping slash accounting team is dealing with that, but I'm going to double check for
I would
sure.
say
That's a good one.
you should know about it.
Yeah, yeah.
So you should definitely know about it. If it is happening, you want to make sure that you know that it's happening. You should have an accountable plan on record. So if you were ever audited, that accountable plan is in your corporate records, not your
Okay, yeah.
CPA's,
Yep.
yours, and you want to have that documented. So talk to your CPA about an accountable plan. Just want to clarify the roles between a bookkeeper and a tax accountant. Your tax accountant should be the one doing the accountable plan for you. Ultimately, they are the CPA who is signing off on your tax return, and they have to be comfortable with the accountable plan and anything else that you're taking as a write-off. So it's really not a bookkeeper function. It's really that CPA function. So we do accountable plans for our tax clients, not our bookkeeping clients.
Got it. Love it.
Next, we have uniforms. This is something I hear in this industry a lot is I'm going to go shopping. I'm buying myself some new clothes. The only place I'm wearing these clothes is for the photo shoots that I complete or the events that I attend. The IRS says, absolutely not. You cannot write off regular clothes that you can wear other places. But I want you to be able to take the tax deduction.
Okay.
So if you are going to purchase clothes that you are only wearing for work, you can simply add your logo to those pieces of clothing. And we've now made our clothing a true tax deduction. So we recently did coats. I wanted hats, gloves, and coats for Kickstart. Put our nice little logo on the side. And now that has become a business expense for both myself and for the employees that I purchased that for.
So, all right, let me clarify that. Let's say that I'm a wedding photographer, which I'm not, but let's say that I am, and I wear, like a black jumpsuit when I go photograph weddings. And I don't particularly want a big splashy logo on my clothing. I want it to look, to have a particular sort of sleek look, whatever, not noticeable. Is this like, it has to be a legit like corporate logo on the front breast pocket, or could it be something pretty subtle somewhere?
I think it could be totally subtle.
Do you
be subtle.
Yeah, can you do that? Let's say that I want to buy that at a store, that is not a uniform store. Can I purchase iron-on patches or take that somewhere to have it like embroidered, or is it something that I need to like purchase somewhere where they will add that officially?
So ultimately, if you are ever audited, it's going to be up to the IRS agent and their mood on whether or not they allow it. Our rule followers who are like, I do not want to leave this up to chance.
Sure.
You're most likely going to want to purchase it with the logo from a company who does that so that there's no questions.
Yep.
If you're somebody who's a little more comfortable with risk, you're like, I'll take my chances, then by all means, go purchase the clothing. You can then have it embroidered on and maybe it's in a more subtle location, or you do it in a way that actually looks very sleek and professional. Sounds like a great business idea out there.
It does, doesn't it?
If something ever happens that you were audited and the IRS agent says, no, this is an allowable expense, you'll just pay interest. You'll just pay the tax, interest, and penalties on that expense. So you're not going to IRS prison.
Well, and hopefully you're not buying, $10,000 worth of clothing for work every year either. So, so we are talking about a relatively small thing, but I do love that. I have never, ever created or purchased clothing with a logo on it for my business. I did for many years. My photography business is called Megapixie because I have always had short hair like this. And for years I battled with my accountant about like, come on, I should be able to write off my haircuts. And she was like, nope.
But I'm glad she was saying no.
Yeah.
Because we have too many tax accounts who are allowing these things, especially as we move into this content creator economy.
Right, of course.
How CPAs are advising around the content creator economy. And I don't think we have enough IRS cases yet that have been kind of tried
Sure.
to see how we're actually landing on the content creators. So we are part of the experiment as we're unfolding, but this is a great way where traditionally CPAs who are more by the book are saying, hey, that's really not a uniform. This is a way of making that uniform truly a business deduction.
Yeah. Love that.
All right. Next, I'm going to talk about equipment and gifts. So technically, the IRS has, like, they're very stingy on what they allow for you to give in gifts. Like, it's $25. It's ridiculous.
Oh, wow.
They want you to give gifts through payroll so that they get their payroll tax on it. I understand why they're doing that. So when you are gifting your employees at the end of the year, they want those gifts to be really given as bonuses through payroll. One way that we have seen clients change a gift into a business expense is by taking a like iPad or Remarkable or a tool like that we want to give as a gift, and adding our company branding or loading it with company tools. Now you can allow in your policies for personal use of the iPads, and maybe you also let them load Kindle or other apps onto the iPad, as well as data secure programs as well onto the iPad, so that it can be a business use as well. And now we've just turned what is a not allowable taxable gift into a piece of equipment that is a 100% tax write-off.
So what about the difference between that and gifts that you are giving to clients? Since a lot of people listening probably don't do employee gifts every year because they're, they don't have employees.
So same thing with the client gifts. The amount is very low for client gifts. I would still recommend getting creative in how you can give those gifts. And I know you're not going to be giving that type of equipment because it's not an equipment cost, but when you're giving gifts, watch for the amounts and how you can be creative in that gift giving.
And adding branding to it or something along those lines. Yeah. Well, and that's totally a doable thing. I think it's it's a good idea.
Yeah. All right. Lastly, I want to talk about tax. And I mentioned it previously a little bit, is the difference between your bookkeeper and your tax accountant, and kind of what the expectations are from both roles, so that when you are arriving in tax season, you are maximizing your tax deductions. And this isn't, I don't have 100 ways of capitalizing on the tax laws, because in reality, most of us aren't in real estate.
Right.
Really what this is about is looking at our business expenses month over month and truly taking what's a business expense in our business account and truly treating what's personal as personal expenses. And how we are maximizing our tax deductions are through the small ways throughout the year. But we need to be having our conversation with our tax accountant more than one time per year. And I would argue that a lot of people we hear don't even have a conversation with their tax accountant.
Right.
They're sending in the forms, they get a completed tax return back. We need to break that wall down, and we need to have a conversation. So I just want to walk you through the process that we use with our clients. And I'm only doing this so that you can take pieces of this and ask your tax accountant to have this experience with you. When we kick off our client's tax return, we do a tax prep call. And on this call, we're talking about what happened in the business and in their personal life, so that we can hear and listen and put our investigative goggles on to make sure that we're maximizing all those deductions. You can't do that as a CPA when all you're looking at is last year's return.
Sure. You
need to have a conversation. And look, tax accountants, we're not known for our personalities.
I don't know what you're talking about.
So you need to find someone that is willing to have a conversation with you, and that you want to have a conversation with them, so that they can put those investigative goggles on, look at your return, and make sure that you're maximizing those deductions. At the end of your return, every single one of our clients gets a Loom video walking them through the return. Did you know that it's really your responsibility to verify the accuracy of your return?
I do. And it stresses me out, even though I've been good for several years about like having other people do the work. And then I just go through it. But I'm like, oh God, if it comes down to it, this is on me.
Yes.
Yeah.
But there's so many business owners who that reviewing the return feels like a foreign language,
Right.
and they're giving away all their trust to this preparer who they haven't even had a conversation with. They just sent in their forms and believed that it was magic that came back all completed and beautiful and gold.
Right.
We need to work with teams who will give us the tools to understand the information and help us ask questions so that we can feel comfortable with that tax return, because it's ultimately your responsibility.
Yeah. I love, I was going to say, I love that you're using Loom, or, you know, a video tool of some sort, because this is something that I teach to photographers too. You can send like a long PDF to your clients all day long to be like, hey, this is how I think you should get rid. Yeah. 1 in 10 maybe will read it, and they're skimming it. Like if you send them a 2-minute video where you're either, you know, they're looking over your shoulder at the screen if you're trying to teach them something there, or if you're just talking to the camera, even if it's like super low tech, whatever, that information will be received and retained 10 times better. And I, you know, take that and multiply it by 1,000 when it comes to financial information, as opposed to like, this is what I think you should wear for your session or whatever the case may be, because it's just, it is so much more like a foreign language. So the fact that you're walking people through that, man, that is, I hope every CPA out there is listening to you and being like, yep, I'm going to roll that into my business model.
Yeah. They don't want to.
Yeah.
It's
I know.
really hard. Okay. And then we need to continue the conversation. Okay. Mm-hmm. So you filed your return. You're like, it's over.
Done.
I don't need to talk to them again until next year. Not true. Okay. Right. We need to have, we call it a mid-year check-in. It's technically like Q3, Q4, where we meet with every single one of our tax clients. And the purpose of that meeting is to go over their tax snapshot. We're looking at, are you in the right entity type? Should you become an S Corp? Should you dissolve your S Corp status? Have you paid enough in estimated taxes? Are you contributing to your 401k, your IRA, your HSA? Looking at those tax strategies. So that mid-year tax check-in is really important to continue the conversation with our CPAs to make sure that we are checking those boxes throughout the year. The last thing I'll say is the reasonable compensation. So if you have become an S Corp, you are required to pay yourself a reasonable salary. Every single one of our tax clients receives a reasonable compensation at the beginning of every year, so they know exactly how much to pay themselves. You should not feel like you are in the dark on how to manage your finances. You should have both in your bookkeeping and your tax team, the money team, to support those key decisions, especially around how much to pay yourself so that you are maximizing your tax deductions there.
That piece of it, again, is so important. And running payroll and all these different things, if you get to that point, or if you are at that point where you're an LLC filing as an S Corp, that stuff, I mean, whatever, even saying that, I've been in business for 15 years and I have been at that tax bracket for I don't know, at least more than half of that. And it still feels like I'm, you know, putting on somebody else's uniform and being like, oh yeah, I know what I'm talking about. I don't.
Yes, I like that. Putting it in someone else's uniform.
Yeah. Playing, you know, role playing, I guess is what I'm trying to say. But anyway, this is all, it's so important. It does feel overwhelming. I feel like having the right guide to help you through that process is just, it's like the best way to reduce the stress around it.
You're not supposed to know it all.
Yeah.
Like literally when I was working in corporate, when I worked with my CEOs, they didn't know it all.
Right.
They had a team of people in marketing. They had coaches. They had a CFO. They had a tax account, right? Like I think what we can learn from that is that, for God's sakes, take the superhero cape off.
Yeah.
You have to go out and do what only you can do. And there's pieces where you can ask for help and find a team that you actually want to talk to and let them help you. Let them serve.
That. So good. All right, Danielle, let everybody know where they can. Oh, and you've got something juicy for everybody too.
Yeah, go to kickstartaccountinginc.com/gift. And there you can download the top 10 tax deductions. We have our podcast, Business by the Books, and we come out every single week with an episode around how to use your numbers to grow your business. And all of these tax tools, I think I have an episode of every single one of these things in depth.
Yeah.
So you can go find more. But go to kickstartaccountinginc.com/gift. Download that, and it'll also take you to some applicable podcast episodes.
Fantastic. Wonderful. Well, this has been a pleasure. I really do appreciate your expertise here, and I will look forward to talking to you next time.
Thank you very much for having me.
That's it for this week's episode of This Can't Be That Hard. I'll be back same time, same place next week. If you like the show, be sure to check out thiscan'tbethathard.com to explore all the resources we have for photographers. And of course, it would mean the world to me if you would leave a review of the show on iTunes or Spotify. As always, thanks so much for joining me. I hope you have a fantastic week.